All right, folks. Looks like we're gonna get started fairly soon here. Good number of people starting to join. Appreciate those that are able to attend this, given that I had to change it from yesterday. I was just telling everybody that my schedule is so brutal. I'm managing so many clients. I have to kind of just juggle nonstop. But I'm excited for this. I have told Hervé that uh, I think he's the next Mark Mobius, if you guys know that term, that name, because he legitimately knows a lot about the international space. Has a very successful career. He'll talk about his background. And I think international is really interesting now from an asset allocation perspective. I mean, obviously, international has done quite well the last 2 years, but keep in mind, 2 years is not like the 15 or so years, right, that it's underperformed for. And we could be at a very interesting juncture where you really get alpha by tilting overseas. So anyway, for everybody that's here, if you're for the CE credits, I will email you afterwards. I've been having some AI agent bugs, but thankfully I've been working through them. You'll get an email from me to get that CE information. I'll submit the CFP board. If you have any questions, put it in the Q&A section. I'll pop in towards the end. Let's make this as interactive as possible. Um, it's nice to see that home bias may starting to break. Home bias, which is that everybody just loves the U.S. because they live in the U.S. I think real outperformance going forward comes from thinking differently. So I want to introduce Hervé, but again, folks, for everybody here, my name is Michael Guide. I'm the publisher of the Lead Lag Report, founder of Lead Lag Media, and I guess AI expert to some extent now, given all the agent stuff I've been doing the last 3 months. Hervé, you just came on as a client. I'm a big fan of what you do and the way you think. You don't have a fund, at least not yet, but I want you to talk about your background, and then let's get into international investing.
Yeah, thank you, Michael. Yeah, no, I manage separate accounts right now. It's family office, family money, but we opening it to public. We have a long track record investing overseas, and the focus has been really Europe and Japan. And as Michael was saying, it's been quite difficult 15 years, but the last 2 years we see more and more interest in the international markets. Michael, you mentioned Mark Mobius. Mark Mobius was very famous for investing in emerging markets, and I have been investing in emerging markets back in the 1990s, and then got out of emerging markets mostly when everybody was talking about BRICS country. You may remember BRICS stands for Brazil, Russia, India, and China. And then there is South Africa as they added later on. And I thought, that everybody was getting into the emerging markets just because every country was going to catch up with the United States, and I thought that was ridiculous. So I focused back to, my investments on Japan, on the mature economies. That was mostly Europe. But lately, I see a lot of different things happening, and maybe we'll talk a little bit about that. And I'm launching a fund that will invest in Venezuela, which I think is going to be the next frontier and a huge opportunity. But that's my background. As I started back in 1985 for Scudder Stevens and Clark. Some of you may remember. It was a pioneer of international investments. We started the first Korea fund when it was not possible to invest in Korea. And I've been managing international funds for Payne Weber. I was the head of international investment at Provident Capital Management, worked for Schroders in London. So I've had a long career investing internationally. And then 15 years ago, I started my family office. And now we really want to take it to the next level. We manage separate accounts. We have a track record. And as I said, we have a great project launching the Venezuela fund.
I haven't heard that term, by the way, frontier markets in a while. But
Yeah,
that's
because
actually yeah, yeah.
yeah, no, it's true. I mean, we've made so much money in the United States, and the international market has been so neglected. And as you pointed out, I mean, that's when you start looking where people are not looking. And as we've seen in the last few days, I mean, if everybody's making money in the same stocks, well, everybody's going to get out at the same time, and it gets really dangerous, and you can lose a lot of money very quickly. I mean, for me, that was Japan back in the late 1980s, where you had to be in Japan because Japan went up and up and up and up until the music stopped, and it took more than 30 years for the Japanese market to recover. So you have to be careful. Not that US is not a good place to invest. It's by far the best place to invest, but there are a lot of opportunities out there, and it might be a good time to diversify because of valuations.
Yeah, yeah. All right, so let's get into the presentation. So I think again, folks, this will be a really interesting conversation. You can tell already how knowledgeable he is in his background. So I'll be in the background, but again, if you want to do Q&A, feel free to put it. I'll put at the come back in towards the end.
Definitely. And I mean, just interrupt. I want this to be a discussion as much as possible, but I have, a presentation ready here. And this is what I want to go through. First, as we talked about the concentration and, investments are so concentrated, not only just in the United States, but US tech companies, Magnificent Seven, whatever. So everybody's focusing on the same thing and probably neglecting all the opportunities elsewhere. I'm going to make a little bit, I'm going to make the case for macro case, region by region, because you have to look at the world. It's not just overseas as far as the United States. There are some really good opportunities out there. There are some places that are still not that attractive. I mean, I'll talk a little bit about Europe, but even within Europe, there are some countries that are doing much better than others. Yeah, my overseas expertise, I think I've talked about that, and I hope I can demonstrate my knowledge. I will talk a little bit about how Mercator invests and how we are fundamental long-term investors, long only. I will, give a few examples so that you understand how I do that, and I may just show the track record. So let's start by this quote, and it says that I said that, I don't know, I must have heard it somewhere, but trees do not grow to the sky, not even in the United States. And right now, again, we are a little bit like in this mood that, AI and technology is the place to be. And of course, the United States is the leading contender for all these new technologies, although China is trying to catch up. But we can talk a little bit about China. I think it's very difficult to invest in China. I have been out of the Chinese market for 15 years, ever since Xi Jinping became president or the leader or the great chairman or whatever he's called, because I think China is going back to a Mao kind of a regime and is moving away from the Deng Xiaoping heritage of building businesses and opening up its economy. As I said before, it's a little bit like in Japan back in the 1980s. Japan could do no wrong. Japan was taking over the world. At a certain point, the Japanese stock market was bigger than the New York Stock Exchange. The market capitalization had overtaken the New York Stock Exchange capitalization. So it became crazy. And I don't think we are there here in the United States, but there's definitely some excess and definitely better opportunities from a value point of view if you look overseas. This is illustrating is, market concentration I mean, market's the most concentrated ever been of the last 93 years. So in the whole century. Um, and as Michael, you were saying, there's more and more interest in diversification. People realize that maybe the value gap between US market and the international market is too high. There are opportunities overseas, and that's what we want to talk about today. And, to illustrate that, the P ratio here is 20. International market, the EFA index is 15 times, and emerging markets are trading at 12 times, so a big discount. And, international market, EFA market has really underperformed over the last 10 years. Um, does that mean it will continue? It's difficult to think. So I think we may get some kind of narrowing of the gap and see some countries doing the right things in order to catch up with the US economy. So, any questions, please interrupt me. Let's start about Europe, which is really the most difficult part from my point of view to explain to people. Europe, in general, is not doing well. Europeans have been caught in this socialist environment, let's call it. Some of you may remember back in the early 90s, Europe was very excited about all the changes. There were the unification of the European markets. It was called the Europe 1992 project, where you would get, they got rid of all the borders, and they implemented the free flow of capital, the free flow of people, and of businesses all over Europe. And so that kind of was the beginning of lower taxes, more deregulation, a very pro-business environment, and in the 90s, Europe did very well until slowly the European Parliament and the European bureaucracy started to take over. So instead of having a free market Europe, you got a more regulated Europe. Whereas they were trying to open the borders to compete country with country and to compete to attract business by lowering taxes and by deregulating, they moved away from that and gave the power to the bureaucrats, and you had more regulation. So now, they're paying the price. Europe is growing very slowly, and there's a backlash. I think you start reading more and more about elections coming up in France and Germany, polls in the UK showing that alternative parties that are more pro-business parties are becoming very popular. I think the public in Europe wants a change, wants more deregulation, and we have presidential elections coming in France next year, where the so-called far-right party of Le Pen is supposed to win the elections. The AfD in Germany, which is also much more pro-business, is the leading party in the polls right now. So there's a big push towards deregulation, more business, and trying to grow again in Europe. So the political environment is changing. Of course, in the UK, we have the same pressure coming from the alternative party. That is the overall environment. So I think the public is starting to ask for change. Too much regulation, too much taxes, and all, and no growth is a big issue. At the same time, Europe is waking up to the risks of a war. Ukraine was invaded by Russia 4 years ago, and that was a real shock in Europe. And of course, Trump has been pushing for the European countries that are part of NATO to pay their fair share and to start, rebuilding their military power. So there was this long time understanding that in Europe, Germany handles the money and France handles the military, because France is the only country that has a real decent military and has spent money on the military. And that was kind of the understanding. Of course, with the war in Ukraine, now that has been shattered. So the Germans have gotten very serious about spending money on their defense sector, which has a lot of implications for technology. So as defense, investing in defense right now is investing in technology. Rocket ships, satellites, drones, missiles. And so there's a big investment happening right now, not only in Germany, but I think Germany is the leading country there that has made a complete U-turn. For years, they refused to invest in their military. And then, there's not just Germany, France, and the UK. There's all the other countries. Italy is doing much better now. If you look at the fastest growing economy in Europe, it's Poland, a country that, moved away from socialism and never want to go back. They saw how destructive a social economy can be. And so Poland is now the fastest growing economy in Europe, as they have embraced capitalism. So much so, I had dinner last night with a friend who lives in Berlin, and he telling me that the Poles are now buying land and property in Germany. It used to be, of course, the reverse, where the Polish people were the poor people, and Germany had the money and was buying property and cheap property in Poland. Well, that has completely reversed, which is kind of a major turnaround. And then you look at countries like Sweden, which is, again, a stock market is at all-time high right now. And why is that? Well, everybody thinks of Sweden of the example of socialism that works and everybody's happy and so on. But Sweden has made a complete U-turn as well. Back in the 1980s and 1989, actually, the corporate tax rate had reached 60%. Well, they realized that that's not a way to grow the business. So now the tax rate is down from 60% back in 1989 to 20.6%. They have cut their corporate tax rate substantially. At that time, the marginal income rate, tax rate was 90% in Sweden. I mean, it was a truly socialist economy. And they saw the economy was not growing, everybody's getting poorer. So the Swedes being very pragmatic, now the marginal tax rate is down from 90% to 52%. 20% of that is state taxes and 32% is like local taxes. So they've dramatically cut the income taxes as well. They used to have a wealth tax. They abolished that. They used to have an inheritance tax, like we have in the United States. Well, they don't have an inheritance tax anymore in Sweden. So if you look at Europe, there's many different things happening, and Sweden is definitely a country that is doing very well now that they've decided to embrace capitalism and to move gradually and in a very pragmatic way back to pro-business environment. So when people talk about Europe is finished and Europe is kind of fading, it's true, but like everywhere else, when that happens, people react, and that's usually when you have the best investment opportunities. Um, Let me see. Yeah, so yeah, I have here a few examples of how you can make money, and I'll go back to that. But people don't think of Europe as a technology advanced part of the world. Well, don't forget that you cannot make chips without ASML technology of the lithography that is needed for the building of chips. So ASML has a monopoly of the EUV lithography machines, and these machines sell for like $400 million per machine. And TSMC in Taiwan would not be able to make chips. But they have other technology companies that are related to chip manufacturing, ASMI in Holland or BESI. They're all like equipment, semiconductor equipment companies that are highly advanced, and they are basically offshoots of the old Philips company. Then I was talking about the defense sector in Europe and in Germany especially. A company like Rheinmetall is a big manufacturer of armament and ammunition and so on. And the stock has doubled, tripled over the last 12 months. There's a big demand for that. I mean, they have visibility for the next 5 years at least. And then you have especially technology company even in France, like the French leading laser and photonics technology company Lumibird. So there are some pockets of great technology in Europe. They now investing in drones as well. So we cannot completely dismiss Europe. Latin America is a different story, and I have for a long time not invested in Latin America. But if you read the papers, there's a lot going on there. Argentina moved dramatically towards pro-business policies 2, 3 years ago, and the poverty rate, dropped from 53% to 28% as a result. The inflation rate is down substantially. The economic growth is like 5 or 6% now. So Argentina is embracing capitalism, and it's working very, very well. Chile is moving in that direction. You've seen the elections in Colombia recently. So there is a big pro-business populist movement all over Latin America. And the most dramatic is, of course, in Venezuela. I'm just back from Caracas. I'm going back to Caracas in a couple of weeks. I must say, are delighted. Everybody's telling me, thank you for getting rid of the Maduro regime, which is a terrible regime. And now, with the help of the United States, they're rebuilding their economy. And that's why I'm launching this Venezuela fund to take advantage of a potential boom that is going to be comparable, if not better, than what happened in Poland back in 1992. When I went to Poland, and there was this dramatic and rapid change from socialism to capitalism. Well, something like that is happening in Venezuela, but you have even more an opportunity because you have the backing of the United States. You have the oil reserves and the revenues from oil and mining that Poland did not have. And you have the diaspora of the Venezuelans who are living in Miami or in Canada or even Brazil or Colombia. that have made a lot of money and want to go back either to live or to invest. So you have the expertise that they've acquired overseas and the money that's all coming back to Venezuela all at once. And they're opening up their economy. It's very exciting what's going on there. And again, if you can be there early on, which is what I want to do with this fund, you can make a ton of money. I mean, Poland's stock market, the Polish stock market started back in 1991. 6 years later, it was up tenfold. You can make that kind of return probably in Venezuela. Um, I can come back to stock IDs like Mercado Libre, which is the dominant e-commerce and fintech company in Latin America. But let's talk about Japan first to keep the macro picture first. Again, I mean, please, if you have questions over on about Europe or Latin America, don't hesitate to ask them now before I move to Japan. Um, Japan, as I said, went through this huge deflation, and they used to say the lost decade in Japan, and it became not a lost decade, it became a lost 2 decades, and then a lost 3 decades before Japan finally got its act together and absorbed all the excesses of the 1980s. And I can explain why it took them so long. It's a Japanese way. They don't change radically. They change progressively, and they're willing to do it that way. But the bottom line is, um, back in 2012, Prime Minister Abe was elected on his platform of Abenomics. That's how they called it. And it was basically a fiscal and monetary stimulus after 3 years of deflation. And he was able to reflate the economy, and to become more business friendly and more friendly to the stock market. I remember back in the 80s, the Japanese companies were dominating the world because they were willing to sell without any profits. It was not about return on investment. These companies were focusing on gaining market share. They wanted to rule to gain market share globally, and they did. I remember at the time, eight of the largest banks in the 1980s, at the end of 1980s, were Japanese banks because they didn't care about return on investment. Of course, at a certain point, that came back to bite them, and that's when they got into this terrible, terrible financial crisis, which led to depression, which led to deflation, and took them, 3 decades to get out of this deflation. But Prime Minister Abe reflated the economy, and convinced corporations to undo cross ownership in the stock market, for example, because that was a typical Japanese structure. You have, the Japanese company owned shares in each other, and it was kind of all working together. It's a very Japanese way of doing business. And he convinced companies to start undoing those cross ownership, to start focus on return on investment, and to start paying dividends for their shareholders, just become more shareholder friendly. And again, this being Japan, it didn't happen overnight, but it happened, it continued to happen. It's not something they decide overnight and then they change their mind. Once they go in a direction, they keep going in the same direction. And so that kind of brought the stock market back to its all-time high now. And then, I think it's 6 months ago now, or maybe a little more, Prime Minister Takaichi, the first female prime minister in Japan, got elected with a huge majority. She's immensely popular. And she was a protege of Abe. And so she basically is implementing Abenomics 2.0. And big stimulus, fiscal stimulus, spending on defense, just like Japan, spending a lot of money on defense because they feel threatened by China and decide to get very serious about that. And she started, relaxing banking rules and regulations for M&A to cover, another big problem in Japan. M&A, and especially hostile M&As, have always been looked down at and basically never happened. But that is changing. She's trying to push Japanese businessmen in a different mindset, and then more like an American style capitalism. The fiscal stimulus is in very strategic industries, and I have this chart. So this is her plan here for Japan to invest over the next 14 years, and that's what the government is going to invest. But in Japan, again, being a little bit different, the government and private sector invest together. So it's more like a public-private funds. And she has identified, 17 different industries that she wants to spend a lot of money on. And when the Japanese put their efforts in a direction, they all work together and they usually get what they want. So they're investing in AR, robotics, and semiconductors. And, all. And let's remember, back in the early 80s, 50% of the semiconductor industry was Japanese. The Japanese then let the Taiwanese and the Koreans take over, and that's why TSMC and Samsung became leading producers of chips. But the Japanese kept the expertise of the semiconductor equipment. The Tokyo Electrons and Advantest and Disco Corporation and all they have still that technology, and now they want to reinvest in manufacturing chips as well. And so the typical public-private effort is in this new Japanese company, semiconductor company called Rapidus, and the government has convinced Toyota, Sony, SoftBank, and all these companies to invest with the government in this new company, Rapidus, that is making very advanced semiconductor chips. And they think they can, catch up with TSMC within a few years. So the Japanese are getting very serious about technology, but they're investing in other stuff like data centers, batteries, self-driving technology, and putting the money where their mouth is. So, um, when you look around the world and you say, okay, why should I invest overseas? I mean, overseas has underperformed, um, and all the action has been in the United States. But remember Japan. It was the same story back in the 80s where all the action was in Japan. Eventually, music stops. I don't think it's going to be as dramatic as what happened in Japan. I don't see that happening. And again, the United States is still the best place to invest. But there are reasons to invest, diversify in certain areas where there's special expertise that you don't find in the United States. I mean, one good example is, of course, the European luxury expertise. They have the best luxury companies in the world. And people are familiar with LVMH, Louis Vuitton, and Moet Hennessy. And, these are I would say, aspiring luxury companies. You have even better luxury companies that really go after the very, very rich people, like Brunello Cucinelli. Or Watches of Switzerland is a British company, and it's a distributor of Swiss watches. It's a unique expertise in the world. And they are very steadily growing here in the United States. So they know how to sell Rolex. They're the largest retailers of Rolex or Patek Philippe, and the very the high value brands that they sell. And that is a very stable business. It's not dependent on economic cycles, which makes it a very attractive business. I talked about the Japanese semiconductor expertise in the equipment. They have still equipment that are, so advanced that they always operate like either, oligopoly or even a duopoly. There are very few companies that can compete with them because it's such a specialized technology. And then think about, very specific knowledge that the Finnish people have in making icebreakers. Now, all at once, we need icebreakers in the United States. We need a lot of them because everybody's racing to the North Pole. The Chinese are there, the Russians are there, and we don't have icebreakers. So we are building icebreakers in Finland now. They have the expertise. The drone technology, there's some good examples. I mean, Kraken Robotics is a drone manufacturer in Canada, but they bought this German company that has amazing expertise in the batteries that are needed in underwater drones. Underwater drones need to have a huge autonomy and need to be able to go very deep and sustain the pressure of being at, 6,000 feet underwater, for example. And they have that unique technology. They can make those batteries. And of course, everybody needs, drones, be it underwater or on the water or in the air. Terra is a Japanese company. They make drones for the civil applications. And very interestingly enough, a year ago, or even less than a year ago, they bought two Ukrainian company. They bought the expertise that Ukrainians have developed during this war with Russia. As we all know now, Russians are really struggling in Ukraine because the Ukrainians have developed all these drones that are so efficient. So there are, very specific reasons to invest internationally. It's not just a diversification; it's a potential. I mentioned this, the NATO ally rearming. I mean, it's a big factor. Um, and I will leave it there because I've been talking a lot and I think it's time for me to take your questions. But I think the message I want to convey is like, first of all, the United States is the best place to invest, but maybe this is a time to be a little bit cautious in the United States and look at other opportunities around the world.
So the deregulation thing was interesting to me, especially because I have a free market ETF, so it's a little close to home. How do
Mhm.
people even track deregulation when it comes to European economies?
Well, I mean, I don't think people can track it the way you can track it here. You have to,
Yeah.
what I do is I read the French press, I read the Dutch press, I read the European press, just to keep informed. And it's not just, I mean, the Europeans are the experts at the opposite, at regulating. And so, but they're so highly regulated right now that actually any deregulation movement can have even a more of an effect because it's going to free up so much energy like we see in Sweden. I mean, Sweden is a real success story. I was in Sweden 2 months ago, and there were all these small and medium size companies that I had never heard of that came to the market because they've now liberated all this energy. And the Swedes are very good at developing businesses. So to monitor it, yeah, you need somebody who does that for a living. It's difficult for you to do that.
Let's talk about Venezuela a little bit more. What's the makeup of industries in Venezuela? Like, how liquid is that market to begin with?
Very good question. We're very early days. It's a very illiquid market. A lot of the companies had been nationalized by the Chavez Maduro regime, and so they are in the hands of the government, and they were just stealing the money, and all the money that the oil industry was making was going straight into the pockets of those generals, and so that is changing. What I'm looking at is that now that basically Venezuela is becoming and is the 51st state of the United States. And it is, and the Venezuelans are the first one to say that, and they're happy about it. I mean, when in Caracas, everyone says, "I'm so glad America is taking over because we had these gangsters running the country." So they're going to privatize all these companies back. They're going to come back to the stock market, and that will create a lot of liquidity. But the Venezuelans are entrepreneurs. They are very good at creating small companies. There are like two companies in Venezuela that are the equivalent of Uber and Lyft. There's a company that's the equivalent of Starbucks in the United States. All these companies I expect will come to the market. So you're going to see a lot of IPOs, a lot of entrepreneurship, and now they can finally, get access to capital because they had not access to capital, so they couldn't grow.
Question from Richard. Rapidus is private. How do you invest in it? And if so, how much can you put in private holdings?
Um, I don't know if I can give that specific information.
Yeah.
I think I don't think you can invest. It's a private company, so you can invest in the sector because Rapidus has to invest in the equipment. So they're gonna need Disco Corporation's equipment, advanced testing equipment, and so on. So you can benefit through the whole sector. But Rapidus is no, it's not. It's a privately owned company and it's basically owned by the government. But the whole sector is benefiting from it.
You mentioned U.S. is still going to be the best place to invest. So for those that are allocating, thinking about international versus US, yeah, you can look at like the All Country World Index as a proxy, right, for how much benchmark indices tend to allocate. But given your bullish view, what do you think makes sense from an allocation perspective to go international as a percentage of portfolio?
Yeah, that's a difficult one because when international was very exciting. I joined Scottish Clark back in 1985, and it was we were really the pioneers of international investing, and there were only like three companies doing that. Fidelity didn't have international portfolio. I mean, it was just Templeton, Scudder, and T. Rowe Price, and we started to convince people to do that, and then it exploded in the early 90s. Everybody wanted to have exposure to international because Japan was at first was doing so well, and then Europe was doing so well, and then everybody wanted to get into the emerging markets. So at the time, the rule of thumb was 15%. And then, of course, people got burned, especially in the emerging markets. I think they went in there, emerging markets at the wrong time. As I was talking about this BRICS craziness, where people compared, investing in Brazil with the United States, saying that Brazil was so far behind, so you could only catch up, and there was more growth. So people got burned. So 15% is a lot for people now to do. But again, being a little bit contrarian right now, would make sense.
Again, folks, if you're here for the CE credits, I will email you afterwards to get that information. Is there anything that we haven't covered that you haven't touched on? Again, folks, I appreciate that you're here. I think you can tell that it's very well thought out. I happen to agree with the thesis. I've been waiting for the emerging market theme for a long time. It's like emerging markets have been underperforming since '08
Mm.
badly against the S&P. Um, any thoughts on, I know you kind of touched on this a little bit, or maybe in the final few minutes here, but um, is AI going to be an equalizer, let's call it, for these economies? Because one of the reasons you can argue there's maybe some bearishness is, well, you don't have to hire somebody in some emerging economy to do work because you can have AI do it, right? The labor arbitrage argument that's been the case
Yeah.
now kind of goes away. Any thoughts on how AI kind of integrates with sort of productivity in emerging economies?
That's an interesting thought. Yes, I think a lot of people have sold the whole China story of being, you invest in China because of labor cost is so low, and they're gonna win everywhere. No, that story is over. So I don't think you invest in emerging markets to take advantage of lower labor costs. AI obviously is an equalizer. There are a lot of very smart people all over the world. They happen to live in, a country that maybe is not as developed, but now they have access to all that knowledge. So in that sense, it definitely will become an equalizer. When I look at the emerging market, I look at those countries that will take advantage of that, and let their country take advantage of that. People, countries that have an entrepreneurial spirit, for example. I talk about Venezuela. I was looking into doing a Argentina fund a little while ago too, when Milei got elected and he decided to turn around the country, and he did in a surprisingly short period of time. But then I spent time in Buenos Aires, and I realized, Buenos Aires and the Argentinians, they all want to be Paris. And they want to be a European. They're not thinking like entrepreneurs. Whereas when I go to Caracas, it's the opposite. The Argentinians play soccer, the Venezuelans they play baseball. They have a different focus. They look at America, they look at Texas, they want to be entrepreneurs. So you have to look at those countries that have that mentality and that spirit and that desire to become an economic power.
Final question for me, and this is just a question I think is interesting because I don't know the answer. Let's say yields keep rising in the US. Is that a reason maybe to invest internationally?
Huh. Um, I don't think in those terms. I think in business opportunities, like companies that have a real advantage, strong pricing power, and long term. So my companies, I tend to own them forever. So they go through these cycles, and there are times when it may help you trade a little bit, but I would only look at that from a trading point of view. Interest rates are going up a little bit in Europe as well, and in Japan as well. They're lower than here, but the trend right now is the rates are going up a little bit all over the world, not just here.
Yeah, I just wonder how the currency component plays into that. Actually, on that point, that's actually another point. Let's talk about the currency side. Because there's multiple ways of investing internationally, right? One is unhedged, the other is hedged based on the currency.
Yeah.
How do you view currency as part of that return equation?
Yeah. Um, Again, if it's the euro or the yen, these are real currencies, and by that I mean they're not going to drop 30% overnight. If you invest in emerging markets, you have to be more careful, because there those currencies can collapse. Um, right now, it's the opposite that's happening, but in Latin America, especially, all these economies are being dollarized. So when you go to Caracas, you don't deal in local currency, which is the bolivar. You deal in dollars, and so the economies are usually dollarized. And then you have to look at the currency vis-a-vis, the yen vis-a-vis the dollar, or the euro vis-a-vis the dollar. These are going to move over time. They can move 30%, but it's going to happen gradually. So you have time to adjust for that. Now, there are two ways to adjust. You can hedge it, or you can increase your exposure to exporting companies, for example. So Japan right now has a very weak currency, a way too weak currency. I expect it to firm anytime, but it's not happening yet. But there are a lot of exporting companies that are hugely benefiting from that. I mean, think about Subaru. Subaru sells most of its cars in the United States and makes them usually most of the cars are built in Japan. So they're a huge beneficiary of a weak currency. So yes, you lose on the translation, but the underlying business is so much stronger because of it.
For those who want to get access to these slides, you can email me or email Hervé on that. We'll happy to send that to you. Any kind of closing thoughts here as far as how people can reach out to you and just in general, just things that you think people should leave this with?
Yeah, thank you, Michael, for having me. I think I'm ready to kind of spread the message, and we have a very good product, a very solid international expertise. I hope I was able to convey that a little bit. And we're opening up our family office investments to separate accounts. We take smaller accounts, from 100,000 up. And as I said, maybe the next webcast we will do together, we will focus a little bit on Venezuela because when I look around the world, I look at specific opportunities, and I think Venezuela is something totally unique in my long career, way too long career. I participated in Eastern Europe at the right time, and I saw the returns were fabulous. I think Venezuela is something that could be even better. So that fund is coming out. I'd like to talk more about that next time. And hopefully we will launch the fund, I think in October. That's the plan.
And if you're on X, what's your handle? You always give your X handle,
I'm
your Twitter
sorry?
handle. Yeah, you got to give your Twitter
Yeah.
handle too, your X
Yes, yeah,
handle.
yeah. Thank you. Yes, yeah. Thank you for promoting that as well.
Yeah. I'll blast it out to everybody in a bit. So thank everybody for joining. Appreciate the support for these webinars. It is quite a bit of work, but I'm always trying to get thoughtful people. I really do like the way that this is framed. I think it makes a lot of sense from an allocation perspective. Hopefully you do as well. And again, thank you everybody. Thank you everybody. Appreciate it.
Thank you, Michael. Talk to you.
Cheers, everybody.